What's going on with the KIKI token? It's up almost 30% today. It's one of the few Pump.fun ecosystem tokens that actually can gain some traction. Let's have a look at who's actually buying here. Who's supporting this rally? Is this adoption by a lot of small retail wallets, or is this the whales that pump and potentially afterwards dump? Now we're currently at 5.5 cents and the long-term chart just looks beautiful. On December 22nd, we were at 0.3 cents. Here's the website explaining what KIKI is. There's a lot of views on social media. And the account on Twitter, or now called X, has roughly 9,000 followers. On the Telegram channel, we've got 2,500 members. And on-chain, there are 6,200 wallets that hold the token. And so there's clearly positive momentum, but there's also some upside. Because among the trending tokens on Solana, where we order them by their liquidity pool size, KIKI is still at number 24. It's got roughly 1 million worth of liquidity, and there are plenty of tokens that have a multiple of that liquidity. And so in the last 24 hours, we had way more buyers than sellers. Again, the price is up by more than 30%, and we've got 57% buyers versus only 43% sellers. The momentum is still growing. Every day, we have seen more first-time traders than recurring traders since launch. We can ignore the data point today because today has just started. So it's very likely that yet again, we're going to see more first-time traders today than recurring traders. Usually the day starts with a lot of recurring traders, with a lot of automated trading. So this is all UTC time zone. And then later in the day, new investors hear about the token and tend to buy. We also see how the number of token transactions is growing. Again, we can ignore the latest data point. Probably we're going to see another all-time high today. We can also see how the trading volume is quite high. It is not slowing down whatsoever. Yesterday was an all-time high. And it seems like the trading volume is relatively equally split across different wallet cohorts. So small retail is wallets up to $1,000, medium-sized retail is up to $10,000, large retail is up to $100,000, and the whales is above $100,000 worth of the token. The number of holders tends to grow the fastest for the small retail wallets. So over here, we are now not looking at US dollar amounts, but at minimum token holding thresholds. So to be counted as a wallet on the left side, the wallet needs to have at least 20,000 tokens. So again, at the current price, that's a bit over $1,000 worth of the token. To be counted in the chart in the middle, it's a 10x in minimum holding, so $10,000 worth of the token. For the chart on the right, it's $100,000 worth of the token. Again, quite nice constant growth across the board. Of course, the whales don't necessarily grow that much in number anymore because the price is appreciating that much, but the number of holders is also not really going down. It's pretty stable. Now, what I find interesting is that the whales that own a lot of the token, because they're not selling, they now own more of the relative value. So when we define a whale not by the number of tokens, but by the US dollars that are held in the token, then we are seeing how more and more is held by the heavyweights. So that can be seen here on the left. The wallets that hold at least $100,000 worth of the token now have 76% of the supply. The wallets that have up to $10,000 worth of the supply only hold 5%. And so again, there is accumulation across the board. The small wallets now hold $600,000 worth of the token. Medium-sized wallets hold 2 million of the token. Large retail almost 10 million. And the whales hold 40 million. Now, the macro picture very much looks like we are at a pivotal moment. It seems like we are very close to an altcoin rotation because the risk to reward for Bitcoin at this moment is not that great. Have a look at this long-term Bitcoin chart and check out those two red lines. At those points of time, the upside potential for Bitcoin wasn't that great anymore relative to the downside. So this is a very long-term chart, right? We did not yet hit the top, but we are relatively close to the top. Now, those lines are not scientific whatsoever, right? They're simply just curved lines drawn on the Bitcoin chart, but they tend to connect the tops relatively well and they tend to connect the bottoms relatively well. Currently, we are very close to such a high risk, poor reward situation for Bitcoin one more time. Now again, have a look at those two red lines. Those points in time correspond with those red lines over here. This is the Bitcoin dominance. The Bitcoin dominance crashed when the risk to reward for Bitcoin wasn't that great anymore. What does a Bitcoin dominance crash mean? It means that Bitcoin as a fraction of all of crypto is going down. In other words, it's altcoin season. The altcoins outperform Bitcoin at that point in time. Now, historically, that rotation happened when Bitcoin dominance was at around 70%. This time it seems to happen a bit earlier, but it looks like we have already started the rotation again because the risk to reward is not that great at the moment for Bitcoin. People want to get the multiple X returns, and they're not anymore that easy to be made with Bitcoin. And so what asset class performed the best in the last 7 days? It is the risk on categories. It's things like frog themed tokens or AI memes. And so the largest of the AI meme tokens are things like Fartcoin, which is currently at 44 cents, which had been covered on this channel when it was still at 5 cents. Or it's things like Goceus Maximus, which is currently at 56 cents, and it was at above $1.30 at one point, which was covered on this channel when we were still at 25 cents. Or here, another AI meme, AI16Z, currently at 67 cents. And we talked about this here at 28 cents. Now, how did I discover tokens like this that early when they still make multiple X returns? The answer lies in on-chain analytics and in wallet tracking. I like to track wallets of other insiders, of influencers, of top traders. And so have a look at the recent trade. I published this in the Gerhard Trade channel on December 10th, how I'm buying some Alchemist AI. And since then, the price appreciated by more than 40%. And it is the best performing token on Solana in the last 24 hours. This is not random. This is not luck. This is all happening because of wallet tracking, because we get transactions whenever influencers and top traders are buying. Here, have a look at this recent trade by Crypto Gains. He bought Morph AI, and this is the chart. This is a channel of Crypto Gains. He's got 140,000 subscribers, and he talks about small cap cryptocurrencies regularly. And we are tracking 55 of his wallets. Or have a look at Crypto Banter. They've got 1.1 million subscribers. When they talk about a token, especially a small cap cryptocurrency, of course, this generates a lot of attention. Attention turns into purchases. Purchases turn into rising prices. And so we are tracking 33 of Crypto Banter's wallets. Or check out Alex Becker, 1.5 million subscribers. Through on-chain analytics, we found 12 of his wallets. Those are not official wallets, right? Those are wallets that we find through various means. Now, what kind of means? It's explained over here in this tutorial course. It's 8 videos in total. It's explaining how to find influencer wallets, how to track influencer wallets, and how to then interpret the signals that we get from the tracking. It's all part of the premium membership of this channel. Premium is not just about wallet tracking. It's also about on-chain analytics. It's also about backtesting. It's also about risk mitigation and portfolio diversification. There's more than 100 tutorial videos in total in premium. And so if you want to stop just chasing the trends, if you want to be early, then feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. And so does it make sense to buy KIKI right now? It seems like there is accumulation across the board. Small retail continues to buy. The whales are not selling. They keep on holding, thus having a lot of the value of the token. I believe the most likely scenario is that trading over time will shift from the decentralized exchanges to the centralized exchanges. So the market makers are likely going to buy in over time, supporting the price. Because have a look at this. Pretty much all of trading volume still happens in a decentralized manner. Yes, the token can be bought on Gate.io, but this is definitely not where the price discovery happens. There are no perpetual futures yet. And so as there are more retail investors buying in, as the token gets more and more traction, the centralized exchanges somewhat get forced into adopting as well. They will buy some share of the token as well. And once it's officially announced that the token can also be bought on KuCoin and on MaxC and maybe even on Binance, then of course the price can make another jump. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.